Good day. This is Albert Betts, Executive Director of Insurance Council of Texas. We have a great podcast for you today. I'm joined by my esteemed colleagues, Angie Cervantes and John Snouts. We are less than 30 days, thank God, left in this 89th legislative session. There's a lot to talk about, a lot to update. If you're in the property and casualty industry, I hope you've been keeping track. A lot of potential developments that could really impact our industry moving forward. So we're going to dive right in, talk about what's going on, where we are, eventually at the end, kind of cover upcoming deadlines because we are deadline watching now. But this has been a session that started with 600 bills, or has included 600 bills that we've been tracking. And we're probably down to, I would say, a handful of bills that are really key that we're keeping up to date on. So let's talk about the biggest issue that's been a point of discussion. Angie and John, say hello, just so everybody knows you're here.
We
Hello,
are
everyone.
here. Hello.
Are y'all ready? Let's talk about the biggest issue that we are facing as an industry this session, and that is the notion to change how rates are regulated here in Texas. There's two bills. One has advanced a little faster and farther than the other, Senate Bill 1643. But in the House, we recently had a hearing on House Bill 5519. I want to talk about those bills and what they could mean for this industry. Senate Bill 1643, which has had a lot of discussion, taking up a lot of interest as it talks about changing rate regulation in Texas to plus or minus 10% requiring prior approval. House Bill 5519, plus or minus 5% for prior approval. They are not identical in how they deal with the prior approval of rates. And I will note 5519 includes a very interesting provision that would require or allow the commissioner to literally be able to roll back and revoke a in effect rate. So let's talk about, start with John, kind of the discussions on both bills, specifically on 1643, and how that process has gone so far, and where are we in terms of consideration of 1643 and I guess also 5519.
Thanks, Albert. So I guess maybe start with reinforcing what you said at the top, which is where session stands. So for House bills have to pass the House, most House bills at least, on second reading by next Thursday. That's the last day, which means they have to be out. And sorry, next Thursday would be May the 15th, if I'm doing the math right there. And today, recording this is the 5th. So House bills are pretty close to, they have to be out of committee fairly quickly to have a pretty good chance. And so the hearing on House Bill 5519 by Representative Martinez Fisher, which I don't think was high on anybody's list of concerns among bills about a week ago, but it got a committee hearing in House Insurance largely to kind of give a vetting to the concepts in SB 1643. SB 1643, because it's already passed the Senate, has considerably longer to pass the House. It would have until May the 27th, so another 3 weeks roughly. So yeah, as I said at the top, the hearing on HB 5519, which is an even narrower, more narrowly restricted prior approval bill than SB 1643, that was last week. The industry opposed it and made all the arguments we've been making on these bills, which center on the idea that whatever anyone's concerns might be about affordability in the market, particularly for homeowners, and obviously rates have gone up in general in the last few years, rate regulation is not the answer to those concerns. Our message from the beginning, I know we talked about this on the last one of these podcasts we did, was if somebody wants to do something about costs, they've got to do something about projected losses, and these bills are the opposite of that in a sense, because they sort of assume there's a regulatory issue and that's what's making rates go up or allowing rates to go up. So we continue to combat both bills. We tried to do our messaging very carefully on House Bill 5519 to just talk about the concept of more rate regulation, since SB 1643 is somewhat more permissive than 5519 on the actual prior approval, but both bills from our perspective are just aimed at the wrong problem and therefore can't solve any affordability issues that may be motivating them. So that's my take.
And would you agree that both bills ultimately will politicize rate making here in Texas? Put a lot of pressure to quote, don't file anything above 10 or don't file anything above 5, depending on which law you're looking at, and really moves us to a situation where the commissioner is put in a position where anything above 10%, let's say, becomes a bone of contention, potentially with legislators weighing in. You can't do this, you can't do that, you got to lower it. So really just a bad move for Texas. I know when we've looked, maybe 2/3 of the nation uses some form of file and use or use and file. Not very many use prior approval. So this, over the next few days, next few weeks, this is going to continue to be an interesting discussion to see which direction TWIA ICT wants to take moving forward. And what do we end up with here in Texas? I think we've done what we can to try to spread information about losses. We had some great information on return on net worth here in Texas, where the question becomes, why do companies want to do business here? Because those returns are not great. And I think as long as we continue with that message and companies understand, the risk that is potentially going to hit the marketplace if either of these bills passes. And we moved away 20 years ago from our prior system, and this one has worked for Texas. So despite a lot of misinformation and testimony by other parties trying to paint this as a solution, this is not a solution that we want to adopt here in Texas. So just so all of our members are aware of that, and we've asked for help across the board in trying to get the word out to legislators and decision makers. Um, beyond the logistics of any sort of attempt to regulate rates differently, what else politically or public perception might be driving the idea of price controls here in Texas?
I think one thing that is affecting it is the idea of affordability and property taxes. As some of you know, last session there was a property tax cut that was touted by the legislature, and a lot of people feel that that discount was offset by the rising cost of insurance, and they're starting to sort of lump those two issues together. Even in the layout or closing of his bill, Trey Martinez Fisher, who had 5519, mentioned, he said there was a property tax cut, but with insurance rates being what they are, people are not feeling that that cut. So I think that that's also in context something that I think that politically is impacting rates, and just this idea that something needs to be done to lower rates. Anything to add?
Well, obviously, your property taxes, your insurance rates have nothing to do with each other, other than the fact the value of your property for property taxes purposes may go up. The value of your property, the insurance value of your property may go up. Neither is related, but you're right. There's been some conversation connecting the two as property tax decreases are being eaten up by insurance rate increases, but they are not, it's not cause and effect, and they're not a yin and a yang in terms of what's happening here in Texas. So good context to keep that in mind as we look at the politics of it, and think about, are there forces outside of just the insurance marketplace that are driving this interesting push that started out, as we were told, as a conversation and has moved more towards serious legislation that many members want to pass. So we'll keep up with it. We could probably talk another 20 minutes of going through the history of rate regulation in Texas, losses, et cetera. But let's talk about the other big issue we knew coming into this session, which was the Texas Windstorm Insurance Association, or TWIA. The four-letter word we'd like to throw around quite a bit here in insurance in Texas. Let's kind of review. There's two proposals out there now. Both attempt to change funding for TWIA, but both do it in very different ways. So I'm going to open it up for discussion on the differences between the two bills and what's happened in terms of just discussing how do we, quote, fix funding for TWIA. Let's start with 3689, which is the House version.
Sure. So I think each chamber passed its own bill last week, if I remember the timing right. So 3689 is Chairman Todd Hunter's bill from Corpus. He is has been involved in TWIA issues for a long time, and right now is also the chairman of the House Calendars Committee, which is the single most important position in the House other than Speaker. The Calendars Committee schedules bills for the floor for the general calendar. So 3689 he had on the floor last week. This is very similar to House Bill 1588, which passed last session, passed the House, didn't get through the Senate. Bill is revised some this time, but the concept is still the same, which is that TWIA right now at one of its lower funding levels, and then throughout its funding stack has to rely on debt issuances that then get repaid by either TWIA or coastal policyholders. What the bill does, and this is just debt that they sell out in the private market, what this bill does is the state would step in potentially through the Economic Stabilization Fund, the Rainy Day Fund, and provide funding to TWIA if it's needed to replace that debt funding. That saves TWIA some money on interest and having to go out for the carrying costs on that debt. And then the state ESF fund is backfilled through surcharges on policies statewide. And so through that mechanism, TWIA would have up to $1 billion a year, up to $2 billion total to help replace the debt funding layer. That has a lot of benefits for TWIA in terms of saving money, saving them from the uncertainties of the private debt market, and just shoring up their funding. So that's that idea. The Senate idea is doesn't replace TWIA's debt funding at all, and it doesn't involve the state ESF, Economic Stabilization Fund. Instead, it increases and indexes the industry assessment portion of TWIA. It would go to a 1/3 of TWIA's probable maximum loss. It's sort of complicated, but essentially it takes that assessment from being a set limited amount each year, $1 billion right now, and just makes it whatever 1/3 of TWIA's PML would be. And then the Senate version also reduces the PML for purposes of the reinsurance TWIA has to buy. Right now they have to buy up to 1 in 100. This would be up to 1 in 50. There's some other sort of omnibus aspects of that bill in terms of TWIA's operations we won't go into, but the funding systems are, both bills have an idea of how to do it, and they're very different. And the industry has been working with Chairman Hunter and supportive of his concept, which passed the House pretty overwhelmingly. We are not supportive of increasing the assessment in the way that the Senate Bill 2530 does. That bill also passed the Senate without much fanfare last week. So we will see how those two work their way through the process. They're not companions, but largely on the funding side, both of those bills are probably going to play a role in how this all ends out in session.
No, I think you're exactly right. I think in the House, we actually, I'm going to take credit for it, termed that effort as the Fellowship of the Industry and the Coastal Interest, which was a little different than what happened over in the Senate. But you're right. We'll see what happens. There's some interesting things in 2530, the TWIA office move, which doesn't impact us per se, but is interesting as a solution to TWIA, and the LAE loss adjustment expense not being included in PML, which is in and of itself a non-standard insurance practice, and just interesting to watch. And that's not the first time, just so we're all clear on the PML issue and the LAE issue. This is probably second, third session we've seen that notion, but the idea of 1.5 billion in member assessments, at least as of next year, is troubling. And if you're listening to this podcast and want to go read an excellent editorial on the issue, If you have a subscription to the Dallas Morning News, go look at May 2nd, the editorial on TWIA on this bill in particular, 2530. We didn't write it, but it reads almost as if it's something we would write with questions and concerns about the TWIA funding. So we'll continue to work on TWIA. Let's see what happens with that. I want to mention a bill somewhat related. Well, it is a TWIA bill, but it's not about funding. And that's House Bill 2213, which changes board representation for TWIA. And as it's written right now, would literally mean perhaps less insurance company seats, and would restrict an insurer or any board member rep from living outside of Texas. So something to keep an eye on as well. Let's move from the two biggies, so to speak. Not that these aren't important, but appraisal. There's been 2 or 3 years, a couple of sessions of discussions about, complaints about there's no appraisal left. Companies are withdrawing appraisal provisions from their policies. Let me say off the bat, not true. This was all spurred by, I believe 3 years ago or so, an effort to one company to limit auto appraisals to total losses only. But that became a story and a mythology of everyone's losing the right to appraisal, which is not a quote right by law. It's a right, or at least a provision created by contract created by insurance companies. But regardless, we worked last couple of sessions on this. This session, I think we're close to perhaps having a bill that will be passed, that we worked on it as a stakeholder, other insurance trades, but also the body shops, the trial lawyers, and other groups with different points of view. Let's talk about where Senate Bill 458 is at this point. This is the bill that it changes appraisal. I think it's something generally we found that we can live with. It doesn't have everything we wanted, but I think it's workable. Let's talk about the status of that bill and really what it does at this point, as it's been advanced so far. Andy or John?
Yeah, I can talk about that one a little bit. So the Senate bill as of today is out of the House committee, so it would be eligible for the House floor. Because it's a Senate bill, it probably won't get set super quickly because they're working to get House bills passed right now. But again, I think in a perfect world, we would have probably said no bill mandating appraisal is really necessary at all. We're not operating in a perfect world this session, and so
It's not.
yeah, stunning news. And so
it's perfect to get this issue behind us, I guess. Yes.
Yeah, because this was maybe the most significant issue of last session. It was right near the top of the list, and this session it's probably fifth. I don't know, but so the bill is a mandate for appraisal, and then it allows TDI to do rulemaking. The rulemaking would basically be focused on appraiser and umpire qualifications, conflicts of interest, those sorts of things. We think that's good. The rulemaking also has a provision, and this comes out of the fact that some of the legislators who were interested in this issue really wanted to have time limits in the bill itself, which was always a tricky issue because, what should they be? Should they be different for home and auto, all that? So that instead got put on TDI to try to do rulemaking around that. The aspect of that we've been dealing with for the last couple of weeks now, even though the Senate had a stakeholder process and then sort of took the input from that and put together this bill, which again, we think is not perfect, but is in pretty good shape. There have been ongoing efforts by some on the other side of this issue to try to revisit the question of whether you should have to use or lose appraisal, is the way it's been described. That basically, if you don't invoke appraisal by some arbitrary time limit within proximity to the event or however it would work, that you can't use it at all. So there have been efforts to try to backslide and get that back into the bill. Those haven't succeeded as of yet, but we continue to be watchful on those. And then they made a couple of other technical changes in the bill in the committee substitute in the House that either seem good or at least not objectionable. So,
and I think when we talk about it's not perfect, but it's something that is a lot more workable. there was another bill in the House that was also by Marianne Perez. It was dealing with residential, and that was a little bit more problematic. And she even took down her bill and signed on to this particular appraisal bill. So it has been better, I guess, than it could have been. So
That's a good standard. Better than it could have been.
better than it could have been. Yes.
Senate Bill 458. Let me also note, if you've already got an appraisal provision approved, filed, and approved by TDI, the bill makes it clear that you don't have to go back and refile or do anything differently. And it only applies to companies that are required currently by law to file their forms with TDI. So just so we're clear on that, I think that was a key provision to make sure it got into the bill. So we'll see how this progresses. You're right; it's better than it could have been, and it's something I think, as John noted, in a perfect world, companies already have appraisal provisions. But if there's going to be a law mandating that, this is probably about as good as we could expect to come out of the session. Let's talk about a couple of bills where I'm not going to say they're not going to pass, but at least it looks like that are very early worry. We'll watch the next 3 weeks, but let's talk about Senate Bill 1791, which dealt with non-responsive drivers or non-responsive insureds, and generally a requirement that looked like, as filed, it was going to make companies pay the claim if there's a non-responsive insured involved, regardless of liability. A lot of work, a lot of time putting into try to revise that. Some real questions about the potential for fraud. It would create another avenue for staged accidents. Just have an accident, don't respond, and the claim will get paid. So I'll turn it over to you, John, to kind of talk about the work we've done on that bill, status of it at this point. We're not cheering yet, but at least we know it seems to have slowed down in momentum from probably a month ago or so.
Yeah. Yeah, this was a bill that we were really concerned about, Senate Bill 1791. So there's already some statutory requirements around what an insurer is supposed to do if they're insured. This is on an auto claim, obviously. If they're insured isn't responsive or isn't cooperating in the claim, and you basically have to threaten to non-renew the person to try to get their attention and get them to cooperate. This is a strange issue. I mean, having worked in other states, I don't know of any other state that even has a law around non-responsive insureds, but it sort of has become a thing here for whatever reason. So then this bill would have significantly added on to that current statute, and the most significant aspect, most concerning one, was this requirement to just pay the third party claim. And it was like, well, what does that mean? What if the third party says we want the policy limits and the insurer says we don't think our driver was responsible? Like what's the obligation? Does that lead to some kind of direct action sort of statute that a few states have, Louisiana most notably? So we were really concerned about this bill, did a lot of work on it earlier in session, and it was on the Senate intent calendar a bunch of times. That's how the Senate moves bills. The author has to put them on that calendar, and then when they have the requisite number of votes in the Senate, it can come up for debate. It hasn't been back on the intent calendar now for about, I think, 2 weeks or so. It's
At
getting
least.
to, yeah. So we're really hopeful. Again, the Senate doesn't have a specific deadline for passing Senate bills. It's really just a
No.
function of the
So
House.
cautiously optimistic, because they could also move bills pretty quickly if they want to, but so far, yeah.
But if they don't move it fairly quickly, they'd start to run into problems with the House's deadline for Senate bills, which is the 27th, as we said. So yeah, we're still dealing with some very concerning bills, but didn't want to leave out. We think we are also on course to having some of the concerning ones go away for this session.
Speaking of concerning bills, so Senate Bill 1642, which came out, filed literally, I think, the same day as the prior approval bill was filed, and 1642 would change the structure of TDI to move to a 3-commissioner led organization, ultimately amended to include an executive director under those 3 commissioners. this would literally take us back to the early 1990s when TDI had three commissioner system. That bill made it out of the Senate. It seems to have sort of just sat for the last 2 or 3 weeks or so. Um, I know we were concerned about it. Obviously, whichever regulator you deal with is the regulator, but there's no other state in the country that has three commissioners trying to run insurance. And the reason we switched from it 30 years ago was because it was inefficient. It didn't work very well. So I'll mention that one. I've got names ready. If there are three commissioners, I won't mention those here on this podcast. Call me and I'll tell you later. But we are keeping an eye on that one. But that one seems to have also lost momentum from a couple of weeks back. I want to talk about TDI, not in terms of having three commissioners, but let's go back to their biennial recommendation, which was issued in December of last year, December 2024. At that time, it seemed to be a fairly simple recommendation. Right now, under law, if you non-renew, decline, or cancel certain lines of insurance, you had to, if asked, provide an answer to the policyholder or applicant as to why you took whatever action you did as a company. The TDI biennial recommendation said, well, that would now become mandatory. And a very wise lobbyist and lawyer warned me back in December that that is not as simple as it looks. Um, well, it hadn't been as simple as it looks, John, and you were that wise lawyer and lobbyist who advised me of that back then. This bill, House Bill 2067, has gone through, I'm sorry, Senate Bill 1006. They've gone through multiple variations and permutations so far. Talk a bit in as condensed version as possible, I guess, to how we've gotten to where we've gotten to. What has been some of the major concerns with that recommendation?
Sure, Albert. I don't know if I'm wise or just appropriately paranoid, but
How
so
about
yeah,
both?
yeah, maybe both. So this is one of those bills where either the House or Senate is going to have to redo what they already did because the Senate has passed a Senate bill, the House has passed a House bill, but neither of them have passed the same bill. So short version, we like the House language a lot better. The part of this bill that wasn't even in the file version or wasn't even talked about in the TDI recommendation is actually about data reporting. And that seems to have been the issue that's gotten the most attention, more so than what the recommendation actually was about, which was informing the policyholder about reasons for these adverse actions. So on the data reporting side, we were able to get some language in the House version of the bill that helps prevent that from becoming a company specific data source. That's a significant concern for us because it gets into exposing companies' underwriting criteria, which is a big deal. Fortunately, there's some previous case law and other provisions of the code that help explain why that would be a problem. So we were able to make some headway there on that in the House. We're still going to have to either have the House put that on the Senate bill or have the Senate pass the House bill in some form to preserve that issue. But we've at least made some progress there. And then I guess there have been some other cleanups around how the bill applies to declinations, what counts as a declination. That's not actually very well defined in the law. So the House version of the language defines that better, says, someone actually has to have submitted an application for coverage rather than just maybe their agent is out there shopping without them even knowing who they're shopping with. And then also the bill, workers' comp is out of the bill. There's some other commercial lines that I know as to declinations, there's still an effort to try to figure out, maybe those ought to be handled differently too. But we like the House language better and are going to try to work in these remaining weeks of session to preserve that approach.
The effective date on the House bill is also a little
That's
bit
right.
later to allow for implementation. So I believe it's in March,
Yep,
which
good
was
point.
something that we also pushed for.
Okay, well, that's quite a bit. I know that we could probably talk another 30 minutes on everything else that is pending out there. And I'll throw some terms out. If anybody wants to pick up and say anything about any of these bills, you can. But I would ask our listeners to go take a look at House Bill 1809, and Senate Bill 1238, which we call them the widow tax bill. This was an issue of what happens when someone married loses a spouse, becomes single, and the allegation is their insurance rate goes up, and it's called a widow tax. Take a look at that. A lot of work on that this session, but those bills are pretty much done as they both passed House and Senate. Senate Bill 213, this grew out of a December 2024 story out of Dallas, where an insurer was allegedly, quote, forcing someone to buy another policy. Let's say you had a home policy with them. They were then forcing you to buy auto upon renewal. That has resulted in a Department of Insurance proposed rule to prohibit that practice as unfair and deceptive, and a bill, Senate Bill 213. I won't go into the details of it, but the gist of it is you can't do it. It did protect umbrella policies, and there's some language in there that you cannot sue someone over this practice under Chapter 541 of the Insurance Code. There's a bill again. This is, I believe, session number 4 on replacement cost recovery at 80%. House Bill 854. Take a look at that. That is still pending. It just got out of the House Insurance Committee. So we'll see what happens with that. And then a bill prohibiting oral releases. This is the 3rd session, I believe, or 4th session on that bill as well. And finally, House Bill 149, which is made it out of the House. This is a bill regulating or overseeing artificial intelligence. There's some language in there for insurance companies that make sure that the discrimination standards in that bill for insurance remains the discrimination or anti-discrimination standards that are in the insurance code, and then gives the commissioner authority to enforce on the insurance lines of business. So take a look at all of those. I think those are interesting bills we've worked on and tracked this session. I will go back and point out, I don't think we mentioned Senate Bill 1643 actually was expanded before it left the Senate to include commercial lines of insurance. Previously, it was just personal lines. So if you're a commercial writer, sorry, you did not escape the wrath of Senate Bill 1643. Take a look at that as well. But session is, as we said, under 30 days left. There's a lot to do, not just insurance. School vouchers have passed. The Texas version of DOGE has passed, but they've got school funding, a lot of other priorities. Litigation reform, Senate Bill 30 and Senate Bill 39 are both still pending. So we'll probably do another update in the next couple of weeks as we approach the final week of deadlines or so. But a lot of work. I want to say this has gone fast because it has, but that doesn't mean it's been fun. But it's just been a lot of work by ICT and other trades to try to protect the industry's interest. And I think we've done the best we can, and we'll continue to do so. So take a listen. If you want to keep up, you can follow Legislative Updates and News to Know, which is our weekly newsletter. You can also follow us on social media, on LinkedIn and Facebook, where occasionally we'll comment on some legislation. Check out your local media. We're probably quoted in that media on some piece of legislation because we're getting a lot of questions. And then as a member, go into your info hub. There are complete updates on every bill we're tracking this session. As I said, 600 bills, plus a focus on the priority bills, so you can check status there as well. So a lot of different ways to keep up, see how your business may be affected in Texas going forward. We'll continue to try to do good work for you, and appreciate John and Angie and all their help, and everyone who's listening in. Have a great May, and we'll talk to you soon.
Thanks, everybody.
Thanks, everybody.